Good evening. This is the Angry Capitalist Podcast. This is podcast episode number 12. In this segment of the podcast, I want to touch on a few different tax tactics. As of recording, this is February 2024, and it is tax return season. Normally, this time of year, people are looking to maximize their tax return for the previous year for what they were billed in 2023. However, in my estimation, this is a good time of the year to look at the previous year and also plan for the year ahead. Especially if you are dealing with a tax professional, this is a great time of year to go ahead and start a discussion with them to plan for the upcoming year and how you can reduce your taxes. Personally, I've seen what the government spends its money on, and I don't want to give them a single dime more than I have to without going to jail. So, getting into it. Just for clarity's sake, once again, I know I say this all the time, but this video is for educational purposes only. Please do your own due diligence and consult with your own financial and tax advisor on your specific situation. So the topic for this video is going to be something called an HSA, or a health savings account. Now, I can already feel you watching the video starting to zone out and potentially drift off to sleep with the beginnings of some financial mumbo jumbo. But please bear with me. This gets exciting fairly quickly. So what a health savings account is it's a tax advantaged account. Effectively, you can take some of your personal money up to a certain contribution limit, and you can put this into this account every year. And so, for example, you have your total taxable income, right? And then you also have your standard deduction. So the way this effectively works is whatever you put into that account adds to your standard deduction. So that is tax-free money. Now, once again, there are contribution limits on what you can put in there, and there are various qualifications. One, to have an HSA, but also what that money can, of course, be used for. So this is for only for qualifying high deductible health insurance plans. I know that's a mouthful, but an HSA is not health insurance. As of what I was able to find from my own research, once again, please consult with your own professional for your situation. IRS guidelines for the year 2024 are as follows. So for individual health insurance plans, so if you have yourself, an individual on a health insurance plan, the minimum that your deductible can be to still qualify for an HSA is $1,600. So anything below $1,600, you would not qualify. But if it's above that, if it's $1,600 and above, you would qualify. For individuals who are on a family plan, the deductible limit would be $3,200. So $1,600 or $3,200 if you're on a family plan. Now, assuming you qualify for this kind of tax advantaged account, the funds that you put into this account do not expire. Effectively, if you put $1,000 into that account this year, you take $1,000 off of your taxable income for the year of 2024. That would roll over into next year, and your contribution limit also resets. So, theoretically at least, you could potentially go ahead and contribute the maximum amount into your account every year, roll that over, and have a very sizable nest egg for any health expenses that you may incur in the future. Now, what can that be used for? Why should we be excited about this, right? So, once again, this can vary depending on your specific situation. But a few of the examples that I were able to find were Visits to the dentist. Doctor's visits. This will include your deductible and your copay. So going back to the minimum deductible amount, anytime you have to go toward the doctor or incur some kind of medical expense that would work toward your copay, you can withdraw from the funds you have saved in your HSA. Excuse me. This can also be applied to prescription and some over-the-counter medical medications. So if you have prescription drugs you have to take, if you take various over-the-counter medication, allergy medication, for example, you may put the funds from HSA toward that. When it comes to some over-the-counter medication, don't quote me on this, but I believe you may need a letter of medical necessity. Effectively, that's a doctor's note. We'll get into that more in a bit. This can also apply to various medical tests. So let's say, hypothetically, you just want to have your blood work done, just to have your blood work done. Maybe you're a real athlete. Medical tests would also qualify for your HSA. A few things that would really require a letter of medical necessity. Once again, that's fundamentally a doctor's note stating that for your specific situation, you need whatever it is they're recommending. So let's say, for example, gym memberships or a personal trainer. Those two things, if you have some kind of condition that's like, hey, you need to get into the gym and you need to exercise. I don't care if that's obesity, joint issues, range of motion. Bring that up to your doctor. See if you can get a letter that would say, hey, this patient, you, my individual, you need to go into the gym. You need to have a personal trainer, someone to help you with your diet, something to that effect. Then you could potentially use your HSA to pay for that and have that be tax-free. This can also apply to physical therapy. So if you've been injured in the past, if you have to go to physical therapy, you can use your HSA for that. Certain supplements, once again, that would also depend on a letter from the doctor, getting a letter of that medical necessity. So let's say, for example, if your doctor is recommending that you take a certain supplement, ginkgo biloba, green tea extract, all this kind of stuff. Maybe it's to help with joint inflammation like turmeric, or if it's to help with anxiety, depression, what have you. If you have the letter of medical necessity, you may be able to go ahead and pay for that with your HSA and have that be tax-free. Now, a quick note on that. When it is coming to this HSA account, if you can't, for whatever reason, or you just don't want to, afford a tax advisor to let you know if you qualify or what stuff can be used for this account, I highly recommend you look to the institution that assisted you with opening one. They will likely check your health insurance information to make sure that you qualify for an HSA. So I recommend going there to see if you qualify, if you can't speak to a tax professional, which would be preferred, of course. Now, where the heck do you open one of these things? Well, first off, some employers do offer them. I have heard of some employers having a matching program on their HSA, very similar to the 401k program for the 401k retirement fund. Some employers, based on my preliminary research, do offer HSAs, and they will match what you put into it up to a certain amount of your paycheck. Probably the easiest option to open an HSA would be your local bank. Also, you could look at regional or national banks. These would be your Chase, JP Morgan, so on and so forth. Based on my previous post, I have pointed out that there is some weakness in the banking sector. Please do your due diligence on your bank just to make sure that they won't run into any trouble that may potentially tie up those funds for whatever reason. And also, you do want to check out the reviews on different banks to see how their customer service is, to see if there'll be a hassle with you trying to open this as well as with you trying to use this. Further, some brokerages do also offer HSAs. You can also get a self-directed HSA. What that is effectively is it's still the health savings account. You would still have to meet the specific requirements to open one. However, for the funds that are within it, let's say, for example, you're a younger individual who is not looking to spend those funds right away. You could then go ahead and invest and direct those funds as you personally see fit. Please be careful with this, of course, and once again, you may be better off just going with a standard HSA, or if you do have a financial advisor who assists you with your investment planning, perhaps you could go ahead and discuss this with them to come up with a game plan to grow that nest egg for your medical expenses for perhaps the future when you're getting older, especially when you get into retirement. When it comes to an HSA, I personally didn't want to do this episode without having opened one myself. So I recently checked my health insurance information, and lo and behold, the plan I have is a high deductible account. So I went ahead and I opened one up myself on Monday. Based on my experience opening an account, at the particular branch of my bank that I went to, they haven't opened up too many HSAs. And so it was a little bit of a clunky experience, but pretty good overall. I have the void over here doing bath time. A few things with opening this. One, if it's not a pre-existing banking relationship that you already have, you will have to have your social security card, as well as some form of official government photo ID, so your driver's license, passport, or something to that effect. Additionally, with opening this account, I do also recommend bringing in your insurance card. That will have your deductible limits on there, and if they have any questions about whether you qualify for this account or not, you can go ahead and pull that card out. It'll have the deductible on there. They may ask to take a copy of that along with your other documentation, just to go ahead and make sure that they're compliant with the law so they don't get in trouble for opening up one of these accounts for someone who doesn't qualify. At the end of the year, you should receive documentation from your financial institution regarding your contributions to the account. This is very much the same with, for example, if you contribute to a Roth IRA, you should be getting paperwork from them stating out plainly and clearly, hey, here's how much you contributed to this account in this year for your tax purposes. I hope you enjoyed this episode and this kind of content. I'm trying to come up with a few other tactics that people can use to reduce what they have to pay in taxes. If you haven't already, please go ahead and like the video. If you have anything else you have questions on, or something that is really obscure that you would like to be brought forward, or if you yourself have an HSA and have any examples or stories of how you used it, please drop that down in the comments below. I would love to hear from you. Until next time, take care and have a good evening. Fuck taxes. Stay angry.